Hey guys, Ted the GammaEdge here coming at you with a market recap for June 23rd, 2025. Today's range can really be characterized as a full exploration of our transition zone, which we'll get to in a second, and then a little bit extra bump into the close. And as we'll get to at the end, a ton of single stocks were respecting their transition zones as well. And if you've never heard the concept of the transition zone new to GammaEdge, the way that we view the markets, this past weekend, weekly newsletter, we actually wrote a deep dive into the 3 key transition zones of which we will review today. However, for an in-depth kind of understanding of what they are, how we identify this, etc., you can go to GammaEdge.us, sign up for the free weekly newsletter, and that will be delivered to you. So with that out of the way, we'll get into the pre-market prep of how we got those key levels, key zones today, and then what our intraday tools were telling us. Right, so everything that we do starts with a pre-market prep. This is our SPX 0DT dashboard. What that means is it's just a visualization of the positioning in the 0DT complex at the open. A couple key things to note here is our DEX on our GEX transition zone. That's based off of delta and gamma. There's confluence at 5980, 5975. And then our drunken sailor range, which is our larger transition zone that is good kind of upper and lower goalpost for the day. That was sitting at 6,000 and 5950. And so the structure was very clean today. Those were, key lines in the sand that we were looking at. And again, 6,000 also being a key psychological level. And so just going back to the pre-market real quick, we can see that early in the pre-market around 4 or 5 Eastern Standard Time, ton of interaction with our P-trans level that is 5980. So again, key level, seeing a lot of interaction there. And then we set a pre-market low around our COTMP level, which again is just a key monetization level in the options market. So again, just an example today of exactly how our levels were being respected by the market. Granted, not during the cash session, but still showing their importance in the pre-market. And then at the cash open, dang near right at the open right here, this was 9:30, 9:45. Got a nice consolidation right around the 5980. And then from there basically went up straight to 6,000, the top of our drunken sailor range, and then we were really just not able to see that sustained volume push higher on an intraday basis that we'll get to in a second. And really it was just a kind of slow bleed down from there. Right, and then failure at 6,000, right? Then a bleed down to roughly 5950. Yes, I know we went below 5950, but this is more of a zone rather than a specific level. So again, nonetheless, what we were talking about in the Discord today is once we were starting to see this aggressive move lower, we were saying, not shorting the whole risk to reward down to 5950 was not great at that point, but we're also discussing, the failures to go higher up here at 6,000. And so there was great two-way action all day. And then obviously we got this move here, which was like 8 or 9 straight 5-minute candles higher, rare to see. I think it came on news or whatever. But again, it was simply just exploring the full range of our transition zone today. And then evaluating here, this is our intraday volume analysis. If you're not familiar with this, SPX 0DT volume, we aggregate this on a 5-minute basis throughout the session. So every 5-minute clip, we aggregate the data, find the distribution of that, find the middle point, which is the centroid, and we plot that. So that's going to be your green line for calls, red line for puts. And what we do is as we plot that throughout the session, from the open to any point in time, we can understand what the behavior of speculation is through those centroids, which tells us 2 things. 1, what the character of price action to that point is, so choppy or trending. And 2, all things equal, if we know what the centroids have done, we can project out where those centroids are going to head to the end of the cash session, and price follows centroids. So by knowing where the centroids are going, you have an idea of where price is going, and you can adjust your strategy accordingly. And so today, yes, fairly choppy price action. Put centroid was sideways to higher throughout the session. Call centroid flat on the session, lit on the top of the market. And again, just the way that interacts with the key level 6,000 right here, you can see we weren't pressing above that. At the same time, the call centroids were not pushing higher as well. So kind of a tell there, hey, 6,000 is really the top here. And then same thing as the bottom, as we saw that kind of a little bit of an intraday meltdown into 5950, the bottom of our transition zone, the centroids for the put side were not doing anything crazy as well there. Ideally, if we were going to get an aggressive sell-off, we would see this kind of action, but continue lower. But no, it, more or less started climbing higher. So that speculation to the downside was not being aggressive there. So that's kind of exactly how you want to use the levels in conjunction with the intraday market analysis. Understanding, hey, we're coming up to those key goalposts in our transition zone. We need significant volume in the direction of the move to break free of those and continue with that directional move. And when we do not get that, likely that is a kind of stalling or reversal area. And then same thing, yes, we got that aggressive push higher, but notice how this was from 1:45, 2 o'clock to the close. This call centroid was very flat. And again, price follows where the centroid is going. So hopefully that's clear now about how you use this intraday tool with price action with the levels. And just so you can understand this better, like here is 2:30 Eastern Standard Time. So again, we can see the behavior of the centroids up to that point. So we're projecting out with that line, what the call centroids are going to be doing the rest of the session, fairly flat, put centroid, taking all this data, projecting it out with the line of best fit, which is the dashed line, and that, fairly sideways as well. And then again, here's just a view at 11:55, so you can understand how the tool works. Again, 5-minute slices is how often this chart is reproduced. And then looking at our market trend model, again, just another way we gauge trend and momentum in the market using the tick index. Here we can see it, especially during this sell-off right here. This is spot price, this green line. We can see that there's really no selling into that into this move down here, which was a bit of a tell. Or I guess odd if we were seeing such an aggressive move, but we were seeing really no filter tick selling. In fact, we were seeing a little bit of filter tick buying. So again, that kind of tells you in the moment when we're seeing that aggressive selling, like generally we should see follow through. And again, keep in mind the intraday volume analysis, we're not seeing that put side collapse either. So those were kind of two tools telling you that yes, we are getting a move lower, but is it going to be sustained? Probably not, especially when we got to that 59.50 level. We're not able to stay below that level. So again, after this, it should be clear now how we get those intraday transition zones in the pre-markets. We understand where our goalposts for the day are, and then understanding how we're using those intraday tools to kind of confirm or deny if we're seeing any of those trending moves, choppy moves, all that good stuff, and then adapting that into our strategies, both in terms of trading directionally and more from a directionalist basis, or selling premium around key levels, all that good stuff. And then lastly here, what I wanted to do is go through some of the MAG7 stocks, understand where those key levels were at on an intraday basis, and just showing you, again, these transitions are not just isolated to SPX, what we talked about. They are very, very applicable to single stocks as well, especially MAG7, where the options market are huge, and they play a meaningful impact in driving spot price itself. So again, just going through a couple of them, Google, let me get my answer. Google multiple times in the pre-market couldn't break free of its key 167.5 transition level. During the market, was not able to get through it as well. Then eventually was, able to overcome key 0 gex level, and then, saw that able to push higher. Amazon 210 P-trans level, really kind of unable to break through that all session. It looks like in the aftermarket hours, finally getting a little bit of a move higher, but yeah, it had multiple failures there. Meta, a beautiful kind of retest of P-trans, push higher right up to plus gex, kind of key upside level for us. So again, that's just 3 examples. Coin pre-market trading right around its 300 key level, ton of stacked levels at that level, so a nice little push higher. So again, you can just see these levels are fractal, right? Both in time frame and instruments that we're using. So yeah, 9 out of 10. I'll just say more there. If you're interested, again, go read that newsletter from this weekend, sign up for it. Should get some value out of it. So with that, appreciate the time. We'll see you all tomorrow. Thank you. Bye.